All right, so hello and welcome to the questions and answers follow-up to Elaine's tax webinar that we held last week. There were so many questions that came through the chat during the webinar that we couldn't possibly address them all in real time. So we've gathered the most commonly asked questions and put together this session as a follow-up. We hope this is most helpful. With me today is Elaine Grogan Luttrull, the presenter for the tax webinar. And as always, we need to remind you that this information is for educational purposes only and not intended to be used as tax, legal, or accounting advice. Elaine, welcome back.
Thanks, Emmett. I am really excited to be here again and even more excited about so many fantastic questions that came through from the participants. So let's dive in.
You got it. So the first set of questions are all about the difference between being a hobbyist and running a business. Fire Pony Creative Society asks, what are the tax advantages of calling it a business over a hobby?
I love this question because it kind of implies that you can kind of choose if there's a better tax situation. But really what we do is look at the facts and circumstances, right? So if you are approaching it professionally, intending to make money off of it, have the expertise and the time devoted to make it work, you're running a business. You're not a hobbyist, right? Yeah. In terms of sort of differences, any net income from your business, you pay into Social Security and Medicare taxes on that, right? So that's helping your future self. That's not true for hobby income. There's no kind of self-employment tax on that for Social Security and Medicare. And if you're a hobbyist, you don't get any deductions, right? You just report the income from your hobby with no deductions. With a business, though, you can, in fact, deduct ordinary and necessary business expenses. So we look at the facts and circumstances and then record everything accurately.
Gotcha. All right. So Jessie says that she does her taxes with a major tax preparer each year, and she tracks all of her own business expenses. She says that they tell her that the standard deduction is best for her situation. So her question is, does that mean that her itemized deductions have never been considered in her tax calculations?
This is a really great question because it sort of gets to kind of three different types of deductions: standard deduction, itemized deductions, and business deductions, right? So all humans who file tax returns in the United States can choose either the standard or itemized deductions. And the tax preparer is probably right. For close to 90% of people, the standard deduction is better for them. But since Jessie is running a business, Jessie should also have business deductions reported on Schedule C if Jessie is a sole proprietor or the only owner of an LLC. So what I would suggest is to go back and look to see if there is a Schedule C on Jessie's last year tax return, because that's where the mileage and supplies and all those other business deductions are going to be captured. If not, then yeah, that could mean that the tax preparer didn't understand that Jessie was running a business or wasn't claiming any of those business deductions. But standard or itemized, that's sort of in personal tax world. Everybody gets either standard or itemized. Business deductions go on a separate form though.
Okay, got it. So Katie has a question about switching from a hobby to a business. She purchased the kiln in 2021 to use in her hobby, but in 2022, she started a pottery LLC. Can she place the kiln in service in 2022 and deduct it?
This is a really good question. And I think maybe Amy was in kind of a similar situation as well, who had some student expenses for materials, right? So the general rule is if you cannot deduct it. Anything ahead of time, right? It's not deductible for your business. We would look at that as an owner's contribution to the business, right? So that's kind of the general rule. Having said that, though, depending on how expensive the kiln was, Katie might want to talk to someone and see about maybe the LLC purchasing the kiln from her, especially since it's a relatively recent purchase. That is a very specific tax situation. So Katie would want to get some individual tax advice on that. But the general rule is no, anything you bought before or years before you formed the business, we just look at that as an owner's contribution. Tax deductions have to happen in the year they happen.
Good to know. So Larissa has a similar situation. Larissa is a current student. Can she deduct materials for school since she also does some professional work in this area?
Nope. Sorry, Larissa. You have to keep all of your expenses separate because anything you are incurring as a student, not deductible, right? But business expenses are deductible. And so, Larissa, you have the extra challenge of just kind of keeping your records really clean so that you can show materials purchased for a class project are not deductible, but business materials are deductible.
All righty. So let's switch gears a bit and talk about LLCs and business types. Nia asked if she needs a business name for her sales.
Great question, Nia. The general rule is no. Generally speaking, people can do business under their own legal name as sole proprietors. Nia, if she wants to do business under a different name, she would need to register that name with whatever state she is doing business in. And some states do require you to register a sole proprietorship, even if you're using your own name. So you don't have to use a different name, but you do have to pay attention to your own rules to see if you have to register. New York, for example, is a state where even if you're a sole proprietor using your own name, you do have to register your business. And also, since Nia mentioned sales, Nia would want to investigate to see if what she is selling is subject to sales tax in her state, because she might have to register for a business license as well to collect sales tax. Some states call it a seller's permit, a vendor's permit, vendor's license sometimes. So you usually need something official to collect sales tax.
All right. So Sarah asked, is there any way to rename or dissolve an old LLC to suit my current work model?
Yes, there is. Just like if you are a regular human that's doing business under a separate name, an LLC can do the same thing. So let's pretend Sarah had an LLC, called Good Morning Art LLC or something like that, right? But now she wants to do business under, Creative Paintings or something. The LLC can file a doing business as, or sometimes some states call it a fictitious name registration, but the LLC can basically say, hey, I'm going to do business under a different name now. And usually that's a pretty simple form you can file with the state. If you don't want to do that, though, you can absolutely dissolve an LLC and then start a new one, although you also would need a new EIN for the new LLC and usually new bank accounts as well. So that could create a few administrative headaches if she wanted to go that route.
All right. So speaking of current work, we had a lot of questions about the industry classification codes. Karen, Ryan, and ML all asked about which industry code to use if they work or if the work they did fell into more than one code. For example, teaching and selling art or graphic design and photography.
Yes, there were so many questions about this, right? So I think my general suggestion would be don't overthink it, right? Because sometimes there can be overlap. So pick the one that feels like it best kind of captures the work you are doing and recognize that, your work might fall a little bit towards the edges of the code or even have some overlap, but definitely choose the one that feels best and then move on.
Okay. All right. Good advice. Kristen asked as well if she needs a different business for each venture or if they can all be bundled under one LLC.
In general, they can be bundled if they feel like they're pretty closely related. So, you're a photographer that also does some graphic design, or you're a painter and you lead some workshops out of your studio. That all feels related enough to your business that it can be under one LLC. But if you are, say, an illustrator and then you start a dog daycare kind of business, those feel very different to me. So we would want to separate those out under two different business types.
Gotcha. Okay, so Divine has a question about for-profit versus nonprofit businesses. Divine asked, in the case where you are not making a profit hosting open mics for artists, is it possible to transform the business, an arts business, to a nonprofit business model?
This is a really good question. I probably wouldn't use the word transform, even though I love that word. But if Divine kind of steps back and thinks about the business and says, okay, where is the income going to come from? And if the answer is the income is mostly going to come from contributions, so grants or individual donations, maybe governmental funding, then I think a nonprofit structure might feel like a better fit to the type of business or the type of activity Divine is doing. But if Divine steps back and says, most of the income is going to be from earned sources, so people paying to attend the open mics or submitting their work to be considered for the open mic or selling, merchandise or recordings or something like that, that feels more like a for-profit model. So, depending on kind of strategically where Divine kind of lands and where they want to go with the business, I would let that dictate the type of entity that makes sense. And if it requires a switch, then I would probably shut down the for-profit and then reopen a nonprofit if that's the direction that makes sense.
Okay, so Robert asked about having both a nonprofit entity and a for-profit LLC. What are the legalities around transferring money back and forth between the two types of entities?
Yes, this is a really great question. And I would encourage Robert to loop in board members from the nonprofit, right? Because there's probably an accountant on the board and there's probably also an attorney on the board. And if there's not either of those people, you probably want to recruit those folks, Robert, because what we want to do and what we're watching for is any sort of private inurement, which is someone benefiting from the nonprofit, right? Because the nonprofit exists for the mission, not to benefit someone, right? It doesn't mean you can't do it, but we want to be really careful and we want to have really clear policies, procedures, and approvals in place to make sure, if money is moving back and forth, there is a clear trail, there are clear kind of guardrails about when that happens and clear accounting for it. So for sure, loop in your accountant, auditor, if you have one for sure, and then also loop in an attorney just to make sure everything is captured accurately there.
All righty, so we had a lot of questions about income. In particular, Lady Barbara asked about combining records and basic record keeping. She collects income from Shopify and PayPal. Is there an easy way to combine the records?
Yeah, no, not really, right? If you are using sort of multiple different ways of collecting income, right, there's not, one magical way to simplify it. One strategy I do like, though, is if you have a bank account just for the business, at least then all the Shopify income can be directly transferred to the bank account. And the same thing is true with PayPal and Venmo or Cash App or any other platforms you're using, right? And then at least then in the one bank account, you can say, oh, this transfer from Shopify, this was for that thing I did. This thing from PayPal, this was from a sale to this person, right? So at least then it's all coming into one place and you can use your bank account to sort of give you the foundation for those records, but it's a lot of work.
Okay. So speaking of PayPal, let's take a moment to talk about the 1099K rules. Renee says that her Venmo account is over $20,000. So will she need to report that herself?
Yeah, Renee, this is a really great question. And these rules are really confusing. So what happened is basically the IRS changed the 1099K reporting rules last year and said, anytime you were getting payments of more than $600 through any of these platforms, the platforms were required to send you a 1099K if it was for business income, right? Before that, the rule said you had to have 200 transactions or $20,000 or more in sales to get that 1099K. So if Renee had 20,000 in sales in 2022, Renee's probably still going to get that 1099K because she qualifies for that reporting threshold in either case. What has happened since December of last year, the IRS basically said, okay, never mind that $600 threshold for 1099K. We're not going to implement that rule until 2024. So basically everybody now has another year kind of to clean up their records and make sure that what's going through these business platforms is really business income, right? But the other thing that struck me about Renee's question is that Renee said the account is over 20,000. So sometimes people will receive money through Venmo and then just kind of let it sit there in Venmo. I don't love that strategy, by the way. Venmo is not a bank, so you have no protections to your money that is there. And like we were talking about with Lady Barbara's question, right? If you move that money to a bank account, then you've got that record that sort of prompts you to say, oh yeah, this was for whatever the business purpose was, right? So if you're just accumulating income in Venmo, that will not trigger anything. It's just the new money coming into Venmo that is going to be the income to you. So what I would encourage Renee to do is go back through the Venmo transactions for 2022, identify what the income is, and then make sure to report that as business income. Because even with no 1099K, that is still business income to you that you are required to report.
Okay, so Jesse asked the question, are bonuses taxed any differently than invoiced income, or are they all regular 1099 income?
This is a really interesting question to me because usually bonuses come up if you are an employee of someone, right? And so in that case, yeah, there are some special tax rules for bonuses if you are an employee of someone. But if you're an employee, that income isn't showing up on your Schedule C as business income. Remember that we think of those as two totally different things. So if you are a contractor, maybe you're a writer and you did a project, you sent them an invoice, sent the client an invoice for like $2,500, and they said, you know what, you are so good, Jesse, we're just going to pay you $3,000 instead of $2,500. If that's the kind of bonus situation we're talking about, that $3,000 is just regular business income on your Schedule C. If it's more like an employment bonus, then it doesn't go on your Schedule C at all. It's part of your human income.
Gotcha. Okay. So we did have a number of questions about grant income. So Rachel and Steve wanted to know where it should be reported and if you can deduct expenses against it.
Yes. So if the grant is related to your business, which in most cases it is, it gets reported as business income, and then you report all of your expenses as business expenses against it on Schedule C if you're a sole proprietor or a single member LLC.
Gotcha. So Wyatt is in a similar situation. Wyatt received the grant in 2022, but he didn't spend any of it. Does he have to report the grant as income in 2022, or can he wait and report it in 2023?
I'm sorry, Wyatt. Individuals tend to be cash method taxpayers, which means you report the income when you get it. So that means your grant will show up as taxable income to you in 2022, even if the organization is on a fiscal year. That's for their reporting. You, Wyatt, my friend, are probably a cash basis taxpayer on a calendar year. So you would report the income, and it ends up being a timing difference, right? Because let's say you had a $10,000 grant, you're going to have probably $10,000 of expenses in the next year. So it may look a little weird on your tax returns because there's a mismatch, but you have the income in 2022 and then the expenses in 2023.
All righty, so let's talk about deductions on Schedule C. These were the most popular types of questions we received in the chat. So we're going to start with travel expenses. Let's start with Keith, who asked, how is a designated income expense item like a conference travel scholarship reported on Schedule C?
Yeah, this was a really interesting question. And Keith, it kind of depends on the cash flow, right? So let's pretend, Keith, you signed up to go to a conference and they said, you know what, instead of charging you, $500 for the conference, we're only going to charge you $200 for the conference. In that case, you just have a $200 expense instead of the $500 expense. But let's say you paid to go to the conference, you bought your plane ticket, and then they reimbursed you for the plane ticket as some sort of scholarship type of thing. In that case, what's probably going to happen is they're going to report income to you of, whatever the plane ticket cost, and then you would have the expense. However, they might tell you that they are going to report the expense, right? So if they say, okay, we know we paid you $800 in reimbursement for this airfare, but we're going to report that, don't worry about reporting it. Then in that case, Keith, you've gotten the cash, you're whole, so you would not report either income or expenses. It's kind of a confusing answer, but we basically look to see, where everything goes geographically. Is the organization reporting it as their expense, or are they reporting it as income to you? So it might require a phone call to their accounting person.
That's what I was going to say. They usually will tell you or give you some kind of instruction on that, right?
Exactly.
Okay. So Micah asked about airfare. How is air travel recorded as an expense?
Yep, just like all other travel, shows up on line 24, and you would just save the receipt for the airfare and then note the business purpose. So if you were Keith, you would say travel to attend conference in North Carolina or wherever you were going.
Okay, so Camilo asked, can you expense all the food you buy for meals at the airport for that trip, assuming it is a work trip?
I say yes. Once you are in travel status, that involves being at the airport and eating airport food and, all of that. So Camilo, that all to me counts as meals while you are in travel status.
All right. So from B. Waldron, the question comes, if a fellowship is paying your travel, I assume that it's not deductible.
This is kind of similar to Keith's question, right? Where we confirm with the fellowship to see how they are reporting it. But B. Waldron, if they are just paying for it directly, you're right. It is not going to be deductible to you. The only time it would be deductible to you is if they basically report the income to you. So then you would report income of $1,000 for travel expenses, and then you would report your $1,000 of travel expenses. But check with the fellowship because they are probably not including that in your income payment.
Gotcha. Okay. So Wendy wants to know if galleries are taking the responsibility for paying taxes, but you have an extensive expense list, such as building a new studio. How do you address taxes and a sole proprietorship?
Yeah, Wendy, this is a good question because my guess is your gallery is handling sales taxes on any sales of your work, but they're probably not handling your own personal income taxes on your business income. So you would report business expenses like travel, like investment in your studio, any other business expenses, you would report them probably on Schedule C. And that's where you would also report your income from the gallery. So they are definitely probably covering sales taxes, but they are probably not covering your own income taxes.
Okay. So Dave wants to know, how does entertainment roll into travel expenses, like at conventions out of town?
Yeah, good question, Dave. A couple years ago, at the end of 2017, entertainment expenses became no longer deductible, right? So entertainment is no longer deductible. Now, here's where I think there's probably room for Dave to reflect a little bit about what the expense was. If it was truly like pure entertainment, yeah, not deductible. But if it was a meal with someone at this conference and you were, talking about things relevant to your business, that's probably deductible. But if you're at a conference and it's in a city where your favorite basketball team is, and you just want to go to the basketball game, yeah, entertainment is not deductible. Even if, by the way, you bring some sort of business associate to the basketball game with you. If you buy a hot dog at the basketball game, that hot dog is deductible as a business meal if you're talking about business, but the tickets to the game probably wouldn't be because entertainment is no longer deductible.
Okay, so Rima is taking a flight for a day trip. It's not overnight stay, to see a group exhibition that she is participating in. Is that deductible?
Yes, because there's a flight involved, even if Rima chooses not to have an overnight stay, if you're flying somewhere, there probably could be an overnight stay. So yeah, I would deduct that as travel.
Okay. So a follow-up question from Brandy. What about international travel?
Yeah, same thing, totally deductible. We still want to make sure the primary purpose is business related. And sometimes there could be extra scrutiny, like the IRS might say, could you have done that thing in the United States, right? Did you have to go to this fantastic international locale to do this? But, the answer in the arts is often yes, right? Maybe you're going to conduct a particular type of research or, attend a fellowship or going to an international festival, right? There are lots of reasons why, yeah, there are business purposes associated with international travel. Just keep those receipts and the business purpose super clear.
Okay, so Jeremiah wanted more information on sabbatical deductions. Is travel made during sabbatical that pertains to research and artwork? Are those expenses available to be deducted?
Yeah, so good question, Jeremiah. If I hear the word sabbatical, I'm thinking Jeremiah is probably a professor somewhere and getting some, paid sabbatical time. So my concern would be, Jeremiah, let's be super clear on what is related to your work as a professor or an instructor, which is usually W-2 work, no deductions associated with that, and what's related to you as a business owner of making whatever creative work you make, right? So if you happen to be pursuing professional projects not related necessarily to your teaching during your sabbatical, yeah, that to me feels like it's probably deductible. But if you're going, to something that is very heavily kind of teaching related or closely related to your W-2 job sabbatical, I would say probably not. And of course, if anything is being reimbursed by your school, then we would look to see if you were sort of being taxed on that or if it's counted as your taxable income. So just get clear with yourself on whether it is teaching related or business related, because we want to keep that separate.
Okay, so Keith has a concern about shared expenses like utilities or his cell phone. How does he record those expenses that are both business and personal?
Yeah, this is a good question, Keith. My preference would be pay for them out of your personal account, right? So utilities on your home, for example, your cell phone, right? Pay for them as personal expenses, but save the records. And then for tax purposes, claim the percentage as the tax deduction, right? Assuming you meet the rules to be able to do that. That would be my preference. If it's something that is mostly business, so maybe you subscribe to the Adobe software suite, right? But like once you use it to make a birthday card for your mom, right? I'm just going to call that a business expense and pay for it out of the business account. So, if it feels like it's a little both, I might err on the side of paying for it out of personal and then claiming the tax deduction using my receipts and just kind of making an adjustment. If it's very, very business heavy, pay for it out of business. I hope that helps, Keith.
So Jade has a similar question. If you purchase both business and personal supplies from a store like Target, how would you record that?
Yeah, this was a follow-up to the story we shared in the webinar about someone, they work in production, they bought some stuff from Target for a production. So if you're just looking at the receipt and you buy a houseplant, you might think that's personal, but for this person, it was a business expense for this production. And Jade said, what if I also bought, groceries or something else from Target? And the answer is, in my dream scenario, that would not happen. We would keep those sort of receipts sort of clear and separate, right? Or maybe if you need to buy both while you're there, maybe you use two different credit cards. You check out once for the business stuff and once for the personal stuff, just to keep that separation. That's kind of my dream scenario, because I really don't like commingling if we don't have to.
Okay, so we're going to move on into transportation and travel deductions, which we received a number of questions about. Susan asked if you can take a percentage of your miles instead of the standard mileage rate.
Absolutely. There's more record keeping involved because you have to track it with more diligence. But yeah, you can absolutely do that.
Okay, Lashana asked about Uber and Saudi. asked about public transportation, taxis, Lyft, etc. Where would those costs go?
Those are all public transportation or car and truck expenses. So all of those kind of get lumped into that line 9 for, local travel expenses.
Okay, Magda had a question about purchasing a car. Can she deduct part of the purchase price?
So Magda, it depends. Usually you can if you're using it kind of totally for your business. So let's say you're a chef and you buy a van to do sort of catering type of things. It's a business vehicle. So that's generally where we would start thinking about deducting the purchase price of the vehicle. If you're buying, a new regular old car for yourself and you just happen to use some of it for business, we don't do anything with the purchase price, but then we would basically deduct the business use of your car through that standard mileage rate, but no deduction for the purchase price unless it's a business vehicle.
Okay. So this question can be somewhat really confusing, but Bunny is asking, asked, what is the distinction between miles she can claim versus commuter miles? She goes on to say, my understanding is that commuting to work sites can't be claimed on my taxes.
Yeah. What I'm hearing here, Bonnie, is probably some confusion around that word commuting, because in tax world, that means driving from your home to the principal place of business, which for most tax preparers means where you go to do your W-2 job. Because remember, there are no deductions for W-2 jobs. But Bonnie also used the phrase work site. So let's pretend Bonnie's a muralist, for example, right? Not a W-2 employee, but happens to go back and forth from Bonnie's home to the site of this mural. That is not commuting to a tax professional's ears, right? That's driving to and from the place you are doing business as an independent contractor. So those miles would be deductible. Commuting, though, is not deductible if it's to and from your home and your W-2 job or your principal place of business. So let's pretend Bonnie rents a studio space as a visual artist. She might still be fully self-employed, but going from your home to the studio you rent, that's your principal place of business, right? So that is commuting, right? So no deduction there. But if you're going to an independent contractor kind of site, then that would be deductible.
Okay. So Michael had some concerns about when the mileage starts. He shares that some additional context would be his main contract job is 3 miles away from where he lives, and he goes there 5 days a week. Do I have to start from there or my house?
Yeah, this is a really interesting question. So Michael says he's a contractor, right? So independent contractor, self-employment world, right? And if your contract site is, 3 miles away, right? Yeah, you would go from your house to the independent contractor site and back. So that to me feels like 6 miles a day, 5 days a week, right? But because he starts with, or there's the question, do I have to start from there or my house? Maybe that's more like sort of a W-2 job or a situation where it's not deductible. And then Michael goes from like that site to purchase supplies and then back home. At that point, I would say, okay, driving from where you were to purchase supplies, deductible. And then driving back home from the art supply store feels deductible. There's a business purpose associated with that driving. So we would look to the business purpose. But if the main contract job is an independent contractor job, your mileage is likely deductible, Michael.
All right. So Gail shared that she joined an art guild to help promote her work. Now she is on the board of directors and they meet monthly. Can she use that mileage on her business taxes?
Gail, this is a really good question because generally, if you're on the board of directors of something, that is a volunteer gig, right? We would not have business expenses associated with that. So I think where I probably land is to and from the meetings is probably not deductible because that feels like your service for the organization. But if the guild has some sort of event and Gail has artwork in it, I could see business mileage to and from the event being deductible, because that feels less associated with Gail's work as a board of directors member and more associated with Gail's work as a professional artist. So we really just look to kind of what's the underlying purpose. General rule though, mileage for board meetings, because you're a volunteer, not going to be deductible to you.
All right, so Vanessa will be driving to and from an artist residency that will take place at a state park. She is registered as a volunteer with the state park. Can she deduct the car-related costs associated with the residency?
I think so. Certainly kind of to and from the residency. If Vanessa also just happens to love volunteering at the state park, I wouldn't deduct those miles because that feels more personal, right? But, certainly mileage associated with the residency feels deductible to me.
All right, so Amy wants to know if you are driving to deliver a sculpture for a donation, would the mileage go to other expenses or to car-related items?
I like it in car related, Amy. That's where I would put it.
All right, so let's move on to meals. We had a bunch of questions about food and meals. Candace asked about grocery store purchases and not eating in restaurants. The grocery store purchases deductible?
Candace, I'm leaning toward no as a general rule, but there are some exceptions. So Candace, let's pretend you are a director and you are out of town for several weeks. You have some sort of like space dwelling where you're staying that has a kitchen, and instead of eating in restaurant for every meal, right, you're going to buy groceries for this out of town gig. That feels deductible to me. That would not be eligible for that 100% deduction, right? It's probably limited to the 50% deduction, but that feels like a meal while you are in travel status. So that could be a scenario where groceries become deductible while you are in travel status for your business. But the general rule is groceries don't feel super deductible, especially in your own town.
Okay. So Samantha asked about meal prep for work and related grocery store purchases and wanted to know if those are deductible.
This one, I kind of think it's similar to Candace's question. It feels like the answer is no, but Samantha, let's pretend you're a chef, right? All of a sudden, now the eggs and the flour and everything could be going into your inventory or your supplies, right? So there could be scenarios where that type of prep from grocery stores is deductible, but the general rule is going to be no, especially if you say, nope, I just prefer to eat really well and bring food to work. That's not deductible. That is a wonderful personal choice to make, but there's no tax benefit.
All right. So Valentina has taken on responsibility of paying for meals for a film crew. Is that deductible?
Feels deductible to me. There's a clear business purpose, right? Assuming it's sort of during filming, and generally those types of group meals are deductible.
All right. So Delilah wants to know if networking meals and coffee are those deductible expenses?
Yeah, feels like yes to me. We just want to make sure the business purpose of the meal is clear, right? So Delilah, go ahead and note in whatever system you are using, coffee with so-and-so to discuss ... whatever you talked about, right? We want to make sure the business purpose is clear there.
Okay. So we're going to move on to home studio space and deductibility of that as an expense. So Karen, Lady Barbara, and Carmen all asked about home studios. Would you review the rules for home studio space? Considering that Karen's space is detached, Lady Barbara's space is downstairs with an apartment above.
Yeah, absolutely. This is confusing, right? But what we want to do is identify the space that is exclusively and regularly used for the business purpose, right? So for Karen, it's a detached space. That feels super clear. And for Lady Barbara, it is, the downstairs with an apartment upstairs. So we identify the space that's exclusively and regularly used for the business purpose. We make sure it's the principal place of business, and then we calculate the percentage of the overall space.
Okay. So Bunny says that she has a 4-car attached garage and has dedicated half of that space for her art studio. She uses it for daily artwork and as a teaching studio. The space is not used for anything but the art studio. Would she calculate the square footage of that space based on the total square footage of the home plus garage?
Yeah. Bonnie, this is a great question because you're hitting all the right things, right? The space is exclusively used as the art studio and regularly used. You're making work there every day, right? So you would calculate the space for half of the 4-car garage as kind of the numerator. Forgive me for going into fractions, but that's the sort of business portion. And then your denominator, what you divide it by, would be the overall space, including that 4-car garage space. So you would have, whatever the business part is divided by the total space, and that would give you your percentage.
Okay. So Miranda wants to know, does it matter whose name is on the mortgage? What if my name is not on the mortgage for the space I use in our home? Can my partner benefit from my use of the space?
Good question, Miranda. What we would look at is, is the business paying something? So if you, Miranda, contribute, some percentage to the cost of the mortgage, even if it's in your partner's name, then yeah, you would have an expense and you would be able to deduct that as a business expense. If the business or you are not contributing at all, and your partner is just paying for everything, I think it's a little more challenging there, unless you are legally married to your partner and filing a joint return, because in that case, sort of everything becomes shared. But if you're not filing a joint return, I would just make sure that you or the business are making a payment, and then sort of calculate the deduction based on that.
Okay. So let's move on to general deduction questions. Erica wants to know if she is able to deduct her website annual fee, the website designer creation fee, the monthly app subscription fees like Adobe Photoshop, and purchasing a computer.
Yes, 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 and yes, Erica. I would say on the computer, we want to, if you're using it for personal purposes and business purposes, the personal part is not deductible. So you just want to sort of make sure you're deducting only the business percentage of the purchase price. But yes, all of those things feel like ordinary and necessary business expenses to me.
Okay, Valentina asked, what about a subscription to specific job website for a freelancer?
Yeah, that also feels deductible, right? It feels like a ordinary and necessary required part of soliciting work. So yeah, that feels deductible.
Okay, from Aaron, for events that are networking, is that a suitable expense? And Deb asked if attending local shows is deductible in general or only when you travel.
Yes, networking feels deductible, suitable expense, and local shows or traveling to attend shows, right? All of those feel deductible. Just make sure you are documenting the business purpose of the event, because that's going to be what really kind of underscores the fact that it is ordinary and necessary and connected to your business, as opposed to something fun you are doing.
Okay, so Keith shared that many of his expenses are associated with research. He asked, how are research and development expenses reported when there is no profit within the same and immediate tax year?
Yeah, and Keith, this can be a challenge, right? Especially for research for larger things or big dollar projects where the income lags when a lot of the work is happening, right? So everything is still deductible, right? You as long as the research is legitimate research, it is ordinary and necessary and deductible. What you might want to watch for, though, is depending on how many zeros are attached to these projects and the research, you might have a tax loss in one year and then have the income in the following year. That is perfectly fine. But remember, if you have many years of losses, that will be subject to additional scrutiny. So you will want to be prepared to explain that you are in fact running a business and it's just a timing difference between the years, as opposed to, not running a business and not having any of those deductions allowed.
Okay, so Ryan wants to know, where does traveling to attain photography for his painting where should he or she report that?
It's a good question. Personally, I would put it under travel, assuming, the primary purpose is business related. Research feels like it is. I think you could probably put it under a research category, but I think since we have the travel line, that feels like a better spot for the travel expenses.
Okay, so here's a specific question from Dana. Is the purchase of a musical instrument for her child, who is also a professional actor, deductible?
Good question, Dana. What we would look at is kind of the tax reporting of your child, right? So I'm going to assume your child is still a dependent of you. And in general, unless a dependent is earning more than about $12,000 or so ish, it's the standard deduction amount, the dependent doesn't usually file their own tax return, right? So if your dependent's earnings are under that amount as a professional actor, probably no business deduction for that, since the income isn't really being captured, right? They're your dependent. If, however, your dependent is earning more than that and filing their own tax return, then yes, that feels like the purchase of a musical instrument, assuming it is related to your child's work as a professional actor, and assuming that acting work is not W-2 income, but 1099 self-employment income. Yeah, that feels like it could be a business deduction, but it would kind of hinge on kind of the level of your child's income and the tax reporting status of your child.
Okay, so I hope I am not butchering this next participant's name. Ifako asks, what line does professional development go as to expenses on the Schedule C?
Yeah, great question. I usually put that in that other category with a line that says professional development, because there's not usually a better spot where it feels like it makes sense. So make your own category in that other line section. I think it's line 48 where you list that out.
Okay, so Leslie stated that she has a subscription to a private property to photograph bird rookery. Is this a business expense, and is each trip taken to the location, which is about 50 miles one way, is the mileage also business?
Leslie, it feels like yes. I think, what I would look at is, is this your, how related is this to your business, right? And if it is closely related to your business, right, photographing birds, yeah, that feels like a business expense, both the subscription and the transportation back and forth. If this also happens to be kind of your absolute favorite thing to do, and sometimes you do it just for fun, and sometimes you do it as a business, I would only deduct the miles that are businessy as opposed to kind of the fun miles, right? And that's a judgment call, and that comes up with a lot of different type of research in the arts, right? Because we're often embedded in the thing we're doing, and we would do it for fun and for research. So this is where it's a judgment call, and you have to be kind of honest with yourself about what feels like it's effectively connected to your business and what feels like it's just for you as a human. So deduct the things that are businessy, and personal expenses are not deductible. I hope that helps, Leslie. But, my read on this is, yeah, that feels deductible to me.
So people want to know, is the cost of an annual subscription to software and membership fees to professional groups deductible? And what line on Schedule C would those expenses fall under?
Great question, Keith. Often I see them under other, right, in a separate line that you define called software and subscriptions, or subscriptions or memberships, something like that. I have seen people put software under that office expenses line. As long as you are consistent from year to year and you are clear about what feels like the best fit, either place is probably fine.
Okay. So Georgia wanted to know, if you spend money to make a product that doesn't sell, do you track that in cost of goods sold, like making a painting, getting a frame, but it hasn't sold in 2022?
Yes, Georgia, you do. It runs. What happens from an accounting perspective is that piece that hasn't sold ends up in your ending inventory. So when you go through the formula of, you start with your beginning inventory, then you buy all this, or you add in all the supplies you made, and then you subtract your ending inventory, the difference then becomes the cost of goods sold. That's that formula on the back of Schedule C. So yes, it is deductible. It probably will live in that ending inventory until the work is sold, though. So there could be a timing difference.
So Samantha wants to know what portion of Spotify is she able to write off? I use it, or she uses it to teach dance classes 5 days a week.
Yeah, great question, Samantha. What I would do is maybe look at your Spotify Wrapped list, or you maybe kind of track your Spotify usage. And if, say, 90% of it is Spotify usage in the dance classes you're teaching as a contractor, not a W-2 employee, I would probably then deduct 90% of the Spotify subscription. But if you're looking at it and you're like, at least 40% is just me enjoying music, then you would deduct 60%, right? So you would then just monitor, what's the amount that you are using for business purposes, right? There's not a magic number. It's based on your actual usage.
So Hannah has a similar question. She wants to know if she can write off internet services she runs an online shop.
Great question, Hannah. Assuming that internet is in your home, you can only write off internet in your home if you are claiming the business use of your home deduction, which means you have to meet that exclusive and regular test for using the space. So if you don't meet that test, then no, you can't write off the internet usage. But if you do, then that internet piece gets wrapped up into that business use of home deduction. Or if you're running an online shop out of some other location and you're paying for internet there, like a storage space or a warehouse or an office space, then that would be deductible.
Okay, so Soleil wants to know, or states that she's a translator and wants to know if she can deduct language classes in a language that she does not translate from yet.
I think yes. Since you are already a translator, yeah, that feels deductible to me, Soleil.
All right, so Tara wants to know if she bought a laptop for the sole purpose of work. She doesn't use it for gaming, casual use, etc. Would that be deductible?
Yes, feels deductible. And because Tara notes there's no personal use, I would deduct the whole cost of the laptop.
Okay, so Lady Barbara states that they often donate gift certificates to charities, say in the amount of $125. They pay nothing. They are donations. What can we deduct, since when their clients get $125 off from products when they purchase? Okay, I need to do this one over.
Yeah, that's totally fine. I think I had the benefit of maybe reading it a couple times. So Lady Barbara, let's pretend what you normally, yeah. Lady Barbara, let's say what you normally sell a product or something for, say, $425, and you donate a coupon or a gift certificate to some nonprofit that gives them $125 off the price of what you would normally sell. So instead of selling something for $425, you're selling it for $300. Basically, what's going to happen is you could do it two different ways. In my perfect accounting way, you record the sale at $425, and then you record a gift certificate or a discount of $125. So the net sale is $300, I think. Or what a lot of people will often do is just report the sale at $300, right? So in either case, it's going to be adjustment to the sale since you're collecting less because of the gift certificate. But you don't get an extra donation for the gift certificate. It's just reducing the sales price.
Okay, so Elaine, thanks so much for helping me sort that question out.
You're welcome. Some of these get really complicated.
All right, so Robert had a question about the interest on business loans. Is that deductible?
Feels deductible to me, Robert, as long as it's a business loan. Yes, deductible.
Okay, so let's move on to clothing. So we had a couple of questions about clothing. Gail and Michelle both asked about apparel deductions. Gail says, if I get a shirt embroidered with my logo, is that deductible? What about if Michelle designs clothes with her paintings and purchase them? Is that deductible?
Yeah, so definitely getting something embroidered with your logo, that feels like advertising to me. So that feels deductible. And for Michelle, I would think about, is this a product you're designing and then selling, like inventory? And if that's the case, then Your own use of the inventory could be advertising, or, you know, just deductible is no longer in your ending inventory. But if it's something more personal, you're just liking to create your own clothes with your design, that doesn't really feel deductible. But if it is advertising, then I think there's an argument there.
Okay. So Samantha is a contemporary dancer. Is the athletic wear she purchases considered deductible?
Generally, no, Samantha. And that's because when we're thinking about garments or attire, if it is something you could wear somewhere else, even if you wouldn't, the general rule is it is not deductible. So, you know, rehearsal attire that is, you know, general athletic wear, probably not deductible.
Okay, so let's move on to contract labor. So Susan asked, do you need to send a 1099 if you are filing as a sole proprietor and not a separate business?
Susan, yes, sole proprietors are businesses. So if you paid anyone $600 or more for services, you need to send them a 1099.
All right, so A. Brown asked, if the contractor sends an invoice under their business name, do you still send them a 1099?
Generally, yes. You know, if they are a corporation in some states, you don't have to worry about that. That's pretty rare though. So generally, if you're hiring someone to do services for you and you're paying, say their LLC, yeah, generally you're sending them a 1099.
And Miranda wants to know if you can deduct contract labor if you pay your kids for their help.
This is a great question, Miranda. Yes, is the short answer. The extra context is you have to pay them for something that they are capable of doing, and you would generally pay someone else to do, right? So maybe they are assisting with a workshop you are given. Yeah, that feels deductible. If your child is like 3 years old, it's hard to find something that they would be capable of, you know, earning income for, right? But I think it can be very common for a child, certainly a young teen or a teenager, to help in your business. And then you can employ them or hire them as contractors for sure.
Okay, so Alenza is an artist who often hires other artists to work with him or her, which she or he pays out of pocket. How do he or she report this considering it's an income expense?
Yeah, good question, Alenza. If you are paying other artists, that feels like an expense to me, even if you are not, say, funding their payment. So let's pretend you're getting $1,000 to do a project, you're spending $1,000 on supplies, and you're paying, say, $300 of your own money to artists to help with the projects. That to me feels like $1,000 of income and $1,300 of expenses. So a loss for the project. So yeah, the contract labor is still ordinary and necessary. And my dream is that we find 300 or more extra dollars to kind of shift that project into income producing instead of a loss.
Gotcha. So let's move on to donations. Mm-hmm. So Deb followed up on your statement that labor costs are not deductible, but what if she teaches workshops? If you donate a workshop, are your workshop time and expenses deductible?
No, Deb, your time is not deductible. I'm so sorry. Now, if you have expenses, if you provide supplies during the workshop, you can deduct those costs, right? But your time is not deductible.
So we got another question from a grant writer who she said, I can't write off the time I spend for pro bono work, but can I write off the price I charge for submitting the grant?
No, I'm so sorry. No, this is kind of like the workshop, right? If you would normally charge $2,500, but you don't, no, can't deduct that. If you would normally charge $5,000 to write a grant, no, can't deduct that. But if, say, you have to pay a fee to submit the grant, right? Like a $25 submission fee or something, and you don't charge the client, it's pro bono, you can deduct that fee, right? But no compensation, no time, no what you would have charged. None of that is deductible. I'm sorry.
So sorry. Okay, so Brandy wanted to get more information about a situation that they recently experienced. What if we had clients that never paid invoices? Could we change those into donated work and deduct a project like that?
Yeah, Brandy, I'm so sorry you're in that situation. You know, no, not really, because here, let me talk through it maybe a little bit differently. Let's say you put, $500 worth of supplies into a project for a client, right? Like tangible supplies you can touch, right? If they never paid you, you're not going to have any income, so zero income. But if you are writing off sort of that project, you're deducting the supplies. And even if you're using cost of goods sold, if you don't have it anymore, it's not in your ending inventory. So you are deducting kind of the tangible materials. So in that case, right, you are capturing the expense and you're just not going to report the income, which is, not good. It's a loss essentially, but they happen sometimes. If what you provided were all services, so illustration work or web design or freelance logo work or something like that, there's no donation or no deduction there, because again, that is just for your time. So I'm sorry you're in that situation. Tough lessons learned, but yeah, no deduction except for like the stuff. And then I would just deduct it as supplies or materials or cost of goods sold.
Okay, so we're coming up on the end, and I want to talk a little bit about receipts and records. So Mendel asked, exactly how important is it to keep either physical or digital copies of receipts for deduction purposes?
Great question, Mendel. Dream scenario, you've got copies, physical and or digital, right? But you don't necessarily have to, right? The IRS requires that you be able to show evidence of the receipt or the expense. That would include the date, the counterparty, so who did you pay or who paid you, the amount, and the business purpose. So if you have a record keeping system that captures that, your receipts are less important. But it is always helpful to have them. So I wouldn't say get rid of them, but I also wouldn't lose sleep if you lost a receipt or didn't have one, right? Capture the information you need, and any other evidence like a bank statement or a credit card statement can help as well. But don't lose a lot of sleep over it.
Okay, so Valentina asked, do you have to start an LLC to have a second bank account for the business?
No, you, a regular human, can open up a second bank account. And in fact, that's what a lot of sole proprietors do. If you have an LLC, you have to have a separate bank account. But if you're a sole proprietor or a person doing business as another name, you can open a second bank account and just use it to kind of capture your business activity. You do not have to be an LLC.
So Elaine, what about tax pros? Sarah asked, can you provide a list of CPAs who have experience working with artists? I've talked to CPAs that aren't confident in helping me because they are not experienced with artists.
Sarah, this is such a great question, and it came up lots and lots of times in the chat. So I think it's a really good one to end on. I would say, number one, if someone tells you they're not comfortable, that's really good, right? I like that they are comfortable and professional enough to tell you they're not comfortable doing tax returns for artists, because there are some nuances. One firm I generally recommend is called Brass Taxes. They are based out of St. Louis, Missouri, and they have enrolled agents all across the country who prepare tax returns for individuals who tend to be freelancers, gig workers, artists, individuals that have sort of more complicated life situations. Brass Taxes is really good. They have some of the most accessible fees I've ever found, and I love recommending them. They are not, however, CPAs, so their expertise is in kind of the tax preparation work. If you're looking for a CPA specifically, or for someone who's doing a little bit more proactive planning or something like that, my suggestion would be talk to your peers, talk to other artists or creative folks in your community to see who they use, because you can crowdsource some really good recommendations that way. If that doesn't give you a good recommendation, you can also start looking at any of the nonprofits or arts nonprofits in your area that you love. almost all of them will have an accountant on their board. So sometimes that's a good person to see who their firm is, see who they're working with, right? Because they automatically have some sort of affinity for the arts because they're serving on the board, right? So that could be a good place to start to look for recommendations. But, you know, in my ideal situation, you have someone in your state or territory. You don't have to. You can use, you know, someone who is not in your jurisdiction, but just make sure they're comfortable with your state level tax filings, and go to your friends, go to your peers, go to your network, because you might find a really good recommendation that way.
Awesome. So Elaine, thank you so much for agreeing to follow up with our artist community in terms of the tax workshop we just held last week. We had a lot of participation and a lot of questions that, again, we could not get to during that actual real time. So I am Emmitt Stevenson. I'm the Director of Artist Engagement with South Arts. We hope to engage Elaine again at some future date to do a tax workshop part 2, and we will definitely let you know when we come up on planning the second workshop for tax. Elaine, any closing remarks?
Only gratitude. Emmitt, I'm so grateful to you for hopping on this bonus session and doing the questions with me. And I'm hugely appreciative to the entire team at South Arts who facilitated such an engaging, wonderful experience. So thank you, and until soon.
Definitely. Take care.